Welcome back, finance fans. The great investor Warren Buffett once said, "For most people, the best thing to do is own the S&P 500 index." In this video, we will look at the S&P 500. What is it? How do you invest? And is it right for you? The S&P 500 is a stock market index that measures the performance of 500 of the largest publicly traded companies in the United States. It is regarded as one of the best indicators of the overall health of the US stock market and economy. Its performance is closely watched by investors, economists, and policymakers as an indicator of economic strength. The index is weighted by market cap, meaning that larger companies have a greater impact on the index's performance. The S&P 500 has delivered returns of about 10% per year on average since it was introduced in 1957. This strong historical performance makes it an attractive option for investors looking for growth. It has outperformed most active fund managers over the long term. The index includes a diverse range of sectors, with significant representation from IT, healthcare, and financials. Here are the 10 largest companies in the S&P 500. How do you invest? There are many investment vehicles that track its performance, such as exchange-traded funds. These funds aim to replicate the index's composition and returns, providing investors with diversified exposure to the US stock market. Here are some of the most popular S&P 500 index ETFs, which are known for their low fees and strong performance. I personally own the Vanguard ETF. The expense ratios are fees charged to investors to cover operating costs. ETFs generally have lower fees compared to mutual funds and actively managed funds. By following these next 5 steps, you can effectively invest in the S&P 500 and benefit from its performance. Open an investment account. If you do not already have one, you will need to open a brokerage account. Some popular options include Robinhood, E-Trade, or Questrade for my fellow Canadians. After opening your account, deposit funds. This can typically be done via bank transfer. Research and select an S&P 500 ETF. Once you have chosen your fund, you can purchase it by placing an order. ETFs can be bought and sold throughout the trading day, similar to individual stocks. After purchasing, monitor your investment's performance over time. Many ETFs offer dividends, which can automatically be reinvested. Here is a quick example. If you were to invest $500 per month in an S&P 500 ETF, and using the average annual return of 10%, in 31 years you could have $1 million in your account. The earlier you start, the better. Please remember that past performance is not indicative of future results. Investing involves many risks, including possible losses. Is it right for you? Investing in the S&P 500 can be a wise choice for many investors. Whether it is right for you depends on your own financial goals, risk tolerance, and time horizon. Here are some key factors to consider. The biggest risk with an S&P 500 ETF is market risk. The value of the S&P 500 can fluctuate significantly due to broader market conditions. Economic downturns could lead to declines in the index, affecting overall investment returns. A significant portion of the index's value is concentrated in a few large companies. This can lead to concerns about overexposure to specific stocks, which may increase volatility. If you plan to invest for the long term, 5 years or more, an S&P 500 ETF can be a suitable choice, given its historical performance. Over long periods, the S&P 500 has delivered strong returns, averaging about 10% per year. However, if you need liquidity or expect to withdraw funds in the short term, the risks may not align with your needs. For many investors, especially those seeking long-term growth, investing in the S&P 500 through ETFs can be a solid passive strategy. Instead of being only a consumer, you get to take part in the success of the largest companies in the economy. As legendary investor Warren Buffett suggests, a low-cost S&P 500 index fund is often one of the best investments most people can make. Thanks for watching. If you found value in this video, please like and subscribe. Until next time, keep earning, keep saving, and keep investing.